Good afternoon. My name is Thurman Patterson. Today I'm going to be presenting for my presentation. I'm going to be presenting on how to make a balance sheet. First, I would like to pull up my PowerPoint for you. One moment, please. So here we go. Make sure it's showing for all of you. Okay. Today, basically, I'm going to show you about a balance sheet. First, my table of contents is the introduction. And then I'm going to explain a balance sheet. Next, I'm going to show an example of a balance sheet. I'm explaining how to prepare a balance sheet and then a conclusion. First, an introduction of a balance sheet is basically is one of the major financial statements used by accountants and business owners. Basically, a financial statement, a balance sheet is a key financial statement. It's one of the and most important ones, such as the other ones. There are others, such as an income statement, statement of cash flows, and a statement of stockholders' equity. They all go together in accounting. Basically, at the end of the year, you use the balance sheet to see how a company did from last year to the previous year. So, like in an example, a person can use a balance sheet from December 31st to December 31st, 2016. They're going to look at the beginning of the year all the way to the end and have all of the reports within that year recorded. Basically, a balance sheet is concluded of assets and liabilities. Assets and liabilities are subdivided into currents, and they have several components which within each other in subdivisions, such as cash at a bank or inventory, property, and accounts payables. Uh, for a balance sheet, it has a main it is a main formula. The main formula is owner's equity equals assets minus liabilities, or assets equals liabilities and plus owner's equity. Here is it shows what I just basically said. Assets is half on the left. Assets is half of the pie, and liabilities and equity is on the right. On the left, which is half of that. So that half equals assets. Then on the right one, you also have the same thing. The assets minus the liabilities equals the deficiencies. Assets are things that the company owns, such as stuff that can be used in the future for economic value. These are examples: cash, account receivable, inventory, supplies, prepaid insurance, land, buildings, equipment. They all are assets to a company. Liability is like things that are obligation of the company, such as payables, all types of payables. They um they also go along with the owner's equity because that's also a liability. Examples of liabilities, which I just said, are all payables: notes payables, accounts payables, salary payables, wage payables, interest payables, and accrued expense payables, income tax payables, all of the unearned revenues. Yes. Owner's equity, as you can see here, is are the words used on the balance sheet within the corporation, eh, within in the company. I'm sorry, and a company is a corporation, which is the stockholders' equity instead of owner's equity. Here are some examples of owner equity: common stock, preferred stock, all stocks, retained earnings. Here is a prepared balance sheet that was done in 2005. It is on the company's of Pioneers Advertising Agency. As you can see, as I said, assets and liabilities and owner's equity, they all going to come together for a balance sheet. So you can see assets equals the liabilities and owner's equity. So assets are on the left, liabilities and owner's equities are on the right. So at the bottom, you can see the number assets 21,910, and on the left, on the right, 21,910. It has to equal. If not, you did something wrong. You have to start all over again. A conclusion is the company's balance sheet provides provides investors the ability. I'm sorry, I'm trying to pull up. it provides you to know if they want to invest in that company. So saying they look at that balance sheet compared to last year's balance sheet to see if the company is making progress, making money for the future. If so, then they know if they want to invest in that company. If not, you don't want to be investing in that company because you don't know the outcome of that company. The company can go bankrupt, and you never know. And that concludes my presentation on how to prepare a balance sheet.